Welcome to Breaking News to Trading Moves. Today we're looking at a single piece of news, the latest financial report from Zoom, that's ticker ZM. And what we want to do is analyze what that one report tells us about momentum across different sectors. The goal here is to get a really clear picture of which companies and maybe which industries are gaining or losing based on the market's reaction.
Right. And that report from Zoom, it was a really important update on corporate tech spending, especially right now, given the whole economic climate. Zoom's Q3 results, they just blew past what everyone was expecting. We saw stronger revenue, higher earnings per share, or EPS, and they improved their guidance for the full year.
And it wasn't just the numbers, was it? I saw they also announced they're expanding their share buyback program. For anyone listening who might not track this closely, why is a bigger buyback program such a key signal?
It's basically management giving a big vote of confidence in their own company. When a company does that, it's signaling a couple of things. First, that they think their stock is a good deal at its current price. They see it as a smart use of their cash. And second, it usually means they have extra cash flow. It suggests the business is healthy, it's profitable, and it's making more money than it needs for its own operations.
Okay, that sets the stage perfectly. So let's start with the winners, the immediate beneficiaries. The market clearly liked the news, but where did that capital and optimism flow first?
It went straight into the whole ecosystem that supports hybrid work, especially the companies that are leaning heavily into artificial intelligence. See, Zoom's good numbers don't just validate their products. They validate the entire idea that companies are still spending on high-quality collaboration platforms, especially ones with AI baked in.
That's a great point, because we keep hearing about this big return-to-office push. But these numbers seem to suggest that the software for hybrid work is, well, it's sticking around. So besides Zoom itself, ZM, what other big names in collaboration software saw a lift?
Well, when a big player like Zoom does well, it tends to raise the tide for its peers. The companies competing for those same IT budget dollars. We saw a kick-up in momentum for Microsoft, ticker MSFT.
MSFT.
And for Salesforce, which is ticker CRM.
Okay, help me out with that link. Why would Zoom's success give a boost to a giant like Microsoft?
It comes down to strategy validation, especially around AI. Think about it. Microsoft has its Copilot tools. Salesforce has Einstein GPT. They are betting billions that embedding AI into these tools will drive growth. So when Zoom shows that customers will actually pay for things like AI meeting summaries, it tells investors that the whole industry's bet on AI is, well, sound. It makes people less skeptical.
I see. So it's less about them being direct competitors and more about proving the market is there for everyone. Now, the report also pointed to one specific area of growth for Zoom, their AI-driven contact center. That sounds pretty niche. Why did the market care so much about that one product?
Oh, that detail is vital. It points to a major modernization trend happening across businesses. Contact centers, the places that handle customer service, tech support, they've always been these really complex, expensive operations. Now they're being automated with cloud tech and AI for things like analyzing a customer's tone, routing calls, you name it.
So when Zoom says they have strong momentum there, it's a bigger deal than just selling more software. It's a sign that businesses are changing how they talk to their customers. So which companies in that cloud communication space got a lift from this?
Exactly. If Zoom is winning there, it means the whole market for AI and contact centers is strong. So investors quickly rewarded other players in that space. You saw with FIVN, ticker FIVN.
FIVN.
And also RingCentral, ticker RNG. They are almost entirely focused on these kinds of cloud communication solutions.
What about the bigger infrastructure companies like Cisco? Are they part of this too?
They are, yeah, but for a slightly different reason. Cisco Systems, CSCO, saw a bit of a bump because they sell everything. Collaboration tools, networking gear, the actual hardware that companies like Zoom rely on. So for them, it just confirms that corporations are investing heavily in communications infrastructure as a whole, which is good for their core business of selling switches and routers.
Okay, so we've covered the software layer, the part that users actually see and touch. Now we have to talk about what's underneath all of that. None of this AI works without some serious hardware. If Zoom's AI features are growing, what's the next link in the chain that benefits?
Right. So now we have to look past the software platform to the computational muscle, the AI infrastructure. This is where the money flows into the hardware side.
Yeah.
All of Zoom's AI features, real-time translation, those meeting summaries, they all depend on very advanced chips and a ton of data center power.
And we're not just talking about regular computer servers, are we? This is specialized stuff for AI.
That is the core of it. A lot of the talk around AI is about training the models, like what it took to build something like ChatGPT. But Zoom's use case is mostly what we call inference. It's about using those models in real time, instantly, with no lag for live video and audio. And that creates this huge, constant demand for a specific type of AI processing.
Okay, so who are the winners that supply that kind of computational power for real-time AI?
The market got it right away. More demand for AI software means more demand for the hardware that runs it. It's a direct line. So the biggest beneficiaries are the companies that make the chips for these workloads. That means NVIDIA, ticker NVDA,
NVDA.
and Advanced Micro Devices, AMD. They're basically in a race to supply the specialized chips that make all this real-time AI possible.
We always focus on the chips, but the chips need a place to live, right? In special computers that can handle all the power and heat.
Absolutely. So the market also rewarded the companies that build that server infrastructure. A great example is Supermicrocomputer, ticker SMCEI. Their entire business is about supplying the custom servers and storage you need to run AI at scale. As companies like Zoom spend more on AI, SMCI's business gets stronger because they sell the racks and cooling systems these powerful chips require.
That lays out a very clear path for the winners. Collaboration tools do well, that validates the AI strategy, and that demand flows all the way down to the server and chip makers. Now let's flip to the other side of the coin. What about the sectors facing pressure when these hybrid work tools do so well?
Well, when cloud-based tools post great numbers, it's often at the expense of older systems. It's a bit of a zero-sum game for a company's budget. The
Yeah.
first group to feel that pressure is usually the legacy communication providers.
But wait, don't companies like Verizon, VZ, and AT&T have huge investments in 5G and fiber? You'd think that would protect them. Why did they get hit by this?
That's a fair point. And while their consumer mobile businesses are strong, a big chunk of their enterprise business still comes from old school wireline services. We're talking about traditional business phone lines, private networks, things like that. The success of platforms like Zoom just eats away at the demand for those older, high margin products. The market sees it as a slow structural decline.
And which companies are most exposed to that older tech?
You see the pressure on Verizon, VZ, and AT&T on the enterprise side, but the one facing the biggest challenge is probably Lumen Technologies, LUMN. A lot of Lumen's business deals with that legacy infrastructure, the copper wire, the old switching centers. Their whole model is fighting against this big move to the cloud.
That makes sense. But the impact of strong hybrid work goes beyond just communication tech. It affects the physical world, too.
It absolutely does. When a report like Zoom's comes out and shows such strong, ongoing growth, well, it reinforces the idea that hybrid work is here to stay. It's not temporary. And that weighs on the outlook for physical office space. If companies realize they only need people in the office 2 or 3 days a week, they will eventually shrink their real estate footprint.
So you're talking about the building owners, the office-focused real estate investment trusts, the REITs.
That's the group feeling the pressure. Companies like Boston Properties, ticker BXP,
BXP.
and Vornado Realty Trust, VNO, as well as SL Green Realty, SLG. They are all heavily exposed to office buildings in major cities. The market is adjusting its expectations for how full those buildings will be in the future.
And if people aren't going to the office as much, it stands to reason they're probably not flying across the country for meetings that could just be a Zoom call. Does that bring us to our last category of losers here?
It does. The proven effectiveness of virtual meetings puts a cap on how much corporate travel can really grow. A good report from Zoom is just a reminder that many meetings that used to require a plane ticket and a hotel are now happening online. And often, the online experience is even better with these new AI tools.
So who takes the hit in the corporate travel world?
Well, the major airlines, for one, they rely on those high-margin corporate travelers. So that includes Delta Airlines, ticker DAL, and American Airlines, AAL. Business class tickets are a huge part of their profitability. And then there's the hotel industry, especially chains that cater to business travelers. A key example there is Hilton Worldwide, HLT.
So if we pull it all together, the reaction to Zoom's report really draws a clear line in the sand. There's a strong push towards AI infrastructure and collaboration tools. That's your ZM, MSFT, NVDA. And then there's this drag on sectors tied to the old way of doing things, the physical office and legacy tech. That's your VZ, BXP, and DAL.
That line is exactly where the battle for capital is being fought right now. And for you, the listener, here's a final thought to take away from this. Just reflect on how much The success of all these winning tech stocks now depends not just on their own performance, but on the world continuing to accept and integrate hybrid work powered by AI as the standard way of doing business. If that model ever starts to wobble, so do all of these
A
winners.
great point to end on.
And of course, we have to end with our required statement. This is not financial advice or a buy or sell recommendation. This is purely the opinion of the author.